how does the dollar truly affect Bitcoin and the cryptocurrency market? In specific, I'm going to show you how gold also correlates with Bitcoin and the rest of the cryptocurrency market, help you guys get that edge and get ahead of the crowd to become a professional trader. What's happening, guys? It's prop trader Dan Chung here, aka Champ. Welcome back to another video, and in specific we're going to be talking about the dollar. I found that this was a very interesting topic when I first started to learn how to trade, and I wanted to bring this episode to you to understand how that kind of works. So the first thing we want to talk about and understand is DXY. DXY is another word for the dollar basket, and alongside with this, when I first started learning forex and this whole journey, there was this website called babypips.com, which, you know, I encourage you guys to go and check this out because it helps you understand the basics of the fundamentals of the whole entire financial markets. Now, the dollar is king when it comes to the forex market because it is 60%, 62% in specific of the world's reserve and the trading volume. There is over around 6 trillion traded in the day, and nearly 90% of FX global transactions was used as the dollar. So with these facts being put forward, you know, being 62% of the FX reserves and then 90% in terms of transactions, it shows that the dollar is like the main used currency, right? It's number one. So the dollar is the king of the markets. Now, why would we want that information? Well, the first and most important thing is when we come in to do an analysis, we actually do look at the dollar index first because most things are paired against the dollar, right? So for example, we've got BTC USD, we've got Ethereum USD, we've got all of these USD, and on top of that, think about it, stablecoins, USDT, USDC. So all of these stablecoins are actually made against the dollar again. So it goes to show how important the dollar is. So if we know that the dollar is important, isn't it important for us as traders and people who are in the markets to know what the dollar is doing? We can look at the fundamentals, we can look at the technicals, and as being a trader, the technicals are a key aspect to our trading. So if we were to draw key levels, we can see that this major support here has been tested multiple times in the past. So if that's the case, then how does that affect Bitcoin, or how can we use this information for Bitcoin? Well, you can see that if this is a major support zone, then realistically the inverse should be happening when it comes to gold and Bitcoin, or whatever is paired against the dollar. So for example, if Bitcoin against the dollar, if the dollar is weakening, therefore the price of Bitcoin can rise because the dollar is weakening. If they are both weak, it just depends which one is weaker. If they are both strong, it also depends which one is stronger. So using that, we have the technical analysis aspects, which we can use as a little bit of an indicator to understand where price is going. So we can see we've got a triple bottom at the moment. So therefore, Bitcoin has an opportunity to potentially break at the moment as well on this high, which it has done exactly that, because every time it's come to this 30K mark, you can see the inverse is slightly happening because every time it has come to this 30K mark, it has hit this resistance multiple times. If we zoom in here, you see this, we've got a triple bottom here, and then we've got the triple topper here. It's literally the inverse. So that's the first trick you can see when it comes to this. If you look at the technicals, you can see the inverse is happening. It's crazy, literally, right? I'm showing you one chart and another chart, it shows exactly the same thing. So let's add some spice into this, guys. What we can see is gold. Now, gold generally follows suit because if we've got Bitcoin versus the dollar, we've got gold versus the dollar. If the dollar is weak across the board, then it doesn't really matter what happens between gold and Bitcoin, they will rise together because they're both against the dollar. Let's just show you an example. So we can see here on the 8th of March, right? Even here, we had this massive dip, which was just 14th of March, which was a few days after. So 8th of March and then the 14th, it decided to follow suit. Then if we go on to the dollar itself, the 14th of March, we then had this drop off, and then in the inverse happened, it pushed up and it pushed up. So we've got exactly the opposite thing happening. So that's crazy, right? I think this is super cool. Now, what we also want to understand is the news. The news is the fundamentals and the macroeconomics, the worldly events that are happening in the world that basically affect the dollar. So say unemployment rates, right? Now, the dollar is the king of the market. Now, if the dollar is the king of the market and we have high unemployment rates, that means that the country is not doing so well. We've got a lot of unemployed people, right? So if there is that many unemployed people, the country isn't doing as well. That is weakening for the currency. So if that's weakening, then we can see that dropping. And if with the prices dropping, therefore Bitcoin and gold should rise. And in fact, because it's stronger than the dollar. There's a little bit of confusion when it's first trying to get your head around it. But as you see more of this and you see how that affects the dollar as an overall, you will start to see how this can affect Bitcoin and gold. And then it gives you a heads up and you are prepared for the market and you can have your predictions to plan your trade and to trade your plan. Also, guys, I just just want to say, don't forget to check out our Bitget challenge. We've got up to $40,000 worth of bonuses for you guys, plus a $30 airdrop, which is completely for free. It's like credit, so you get $30 just by being a Coin Bureau fan. So link in the descriptions, make sure you go check that out. So the third and final thing I like to do is look at the rest of the market. So if we're using currency as an example, we can see from the left hand side, which we've got Euro USD, which between March to the current state is in a upwards momentum. If we look at from the 8th of March on GBP USD, we've got an upwards momentum. And then if we look at the dollar has been having an upwards momentum against the yen, which means something needs to inverse and a big move is going to happen. So then if we look onto the crypto side of things, we can see we did have a movement onto the upside, but we've got a slight indecision here. Even though the dollar is weak and all of that is pushing up onto the upside, it hasn't given it enough weakness to break enough to give Bitcoin that surge that we need at the moment. So then if we can see that if DXY does break this support, then we can see Bitcoin should break this resistance. So you can see how the dollar affects the market as an overall, right? It's pretty cool. It's pretty interesting. I found that this was very confusing when I first got started into trading, and I thought it's very important in the cryptocurrency market to understand how all of these inverses work. So let me know what you guys think in the comment below. Did you know any of this information? Do you use inverses, and are you going to use this moving forward? So hope you guys enjoyed it. Remember to like, share, and subscribe. See you in the next video. Peace.